Hello, everybody. This is Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday, August 30th, 2019, and we now find ourselves in the final hour of the trading day and also the final hour of the trading week. It has been a wild one lately, hasn't it? Lots of ups, lots of downs, whipsaws, news, tweets. So we'll see if we can make it through today. Then we have a nice 3-day weekend. Hope everybody's going to have a nice upcoming weekend and have fun and be safe. Hey, JT is here. Hey, buddy, how you doing? It's good to see you. Thank you so much for coming by, and thank you so much for everybody coming by. I appreciate you investing your time by watching this podcast. I hope it's helping you. I hope you're getting some kind of return on your time investment. As I mentioned a minute ago, it's the final hour of the trading day. In my opinion, the prices at the close of the day, or as close as you can get them to the close of the day, are the most valid prices of the day, and therefore they are the most valid prices to make your buying and selling decisions from. And that's why primarily I make most of my buying and selling decisions at the very end. During the day you have the algorithms, you have day traders, and you have a lot of noise. But the price at the close of the day, the prices are taken over by the market makers, by the large financial institutions, and I believe that they're the best equipped, the most knowledgeable, have the best information, and they're going to move the prices where they really should close. So that's why I make my buying and selling decisions from there. Hey, John, good to see you. John says, sounds good. Glad to hear that. Had some technical issues with YouTube lately, so for some reason, if we get disconnected, I apologize in advance. I'm not sure what the issue has been, but we made it through yesterday, okay, so hopefully we'll continue to make it through. Hey, Steve Burns. Hey, buddy, how you doing? Thank you so much for coming by. It's always great to have you here, always an honor. Steve says, hey, Greg, I'm looking forward to listening to your interview with Chris Uhl on 10-Minute Stock Trader. Thank you, my friend. Let me just put over here. I don't think I did a podcast on 10-Minute Stock Trader. I'm going to try to post it here in the... Oh, it worked. All right. Well, good. So I did a podcast with Christopher Uhl from 10-Minute Stock Trader, and I just posted the link in the chat. So if you get a chance this weekend, you want to learn a little bit more about me and my background and so forth, I posted the link and I did that interview. So anyway, check it out if you want. I haven't listened to it yet either, but I have a fair idea what was said since I was in it. So thank you for coming by, Steve. And Steve, thank you very much, as always, for including me in your list of traders on Twitter today. I appreciate that, and I hope you're doing well, and I hope you have a good weekend with Holly and the doggos. So, all right. Well, currently we were up big earlier. Now we're down. We're red across all the indexes. The Dow's down 22, the Nasdaq's down 41. Nasdaq's really kind of taking the brunt of this today, and the S&P is down 5 points. So we're selling off going into the weekend, or at least at the moment we are, and so we'll just have to look and see whether or not we have to make some adjustments to our positions. So, all right, so the plan for today, as always, first of all, I'm going to go ahead and run the U.S. legal disclaimer. We're going to get that out of the way. Then we're going to come back. We're going to go through each one of my positions one by one. We're going to talk about when I bought them, why I bought them, and most importantly, how I'm going to manage them going forward, either to the upside or to the downside. And then we're going to do a few minutes on some trader psychology. As I mention each day, I believe that trader psychology is the most important skill you can learn in trading. And, I think the best way to approach trading for most people is to have a long-term horizon, position size correctly, be patient, take your signals when they come, but with a small position size, so that if you're trading good signals, they should have an edge. They should play out in the long run, but anything can happen in the short run. So take the long view. Don't try to get rich quick. Position size correctly. Let your winners run. Cut your losers short. But if you take that type of view of trading, I think you're going to do fine, and I think you're going to be successful. But if you try to say, I have to make this much each month, I've never found that to work. You just have to go with the flow, let the market give you what it's going to give you when it gives you. And if you try to pressure it, if you try to force it, I've never seen that work for anyone, to be honest with you. And then after we do a little bit on trader psychology, we're going to go through each one of the stocks in my watch list, and we're going to go down one by one. We're going to take a look at all the support and resistance levels, all the indicators, RSI, MACD, ATR channels, and we're going to see whether or not we have something that we might want to enter, that I might want to enter today. And you know, the way I look at technical indicators, I look at them as groups of buyers. So you know, if you want something to go up, you need to enter where there's going to be other buyers. And so the more technical indicators that you can line up, that line up for you both on the daily chart and on the weekly chart and on the monthly chart, the better, because there's all groups of buyers. Some people just trade weekly charts. Some people just trade monthly charts, you know. So getting as many indicators, as many groups of buyers coming in at the same time, I think gives you the best chance of having a profitable trade. And then after the market closes, if you have any questions for me, please let me know. Don't be shy. Just type them in the chat, and I'll do my best to answer any questions you have or clarify anything that I've discussed today. If you'd like me to take a look at any particular stocks, I'm happy to do that as well. So that is the plan for the day, and then we'll have a nice weekend. So the market is closed on Monday, just so you know, right? So, all right, everybody. Well, hang tight. Let me run the U.S. legal disclaimer, and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay, all right. Well, let's get to it and see what's happening today. All right, so first on deck is Amazon. I did buy Amazon back here on the 26th of August. I bought it because the previous day we closed below the 200 and then we closed back above the 200. This is a good, profitable, quantified backtesting signal to trading Amazon, and the key is you stay in it as long as it's above the 200. You get out when it closes underneath the 200 if you're trading it mechanically. I use this as an entry point for a trade, but this is a discretionary trade. So what that means is I'm not going to hold it regardless of what it does until it closes below the 200. If I don't like the price action, I'm going to go ahead and just get out. You know, these long-term approaches like this with the close under the 200 back over the 200, it's valid to just keep them and just wait until it closes under the 200. But problem is, if you take that approach, then you have to go through earnings 4 times a year, and I just don't like the risk of holding through earnings, so you never know what's going to happen. So I did buy this on the 26th when it closed back above the 200. Did take some profits yesterday. Took 2 profit targets on Amazon to the upside when we had that nice big day up. But because this is the discretionary trade, I'm going to go ahead and lock in the profit on this trade for a couple reasons today. Well, I should say as of right now, because we don't know where it's going to close. You know, there's a bunch of different things going on here. We have a bearish engulfing bar to the downside. We went higher and currently lower than the previous bar. We've lost the 10-day. We've lost the 5-day. So, and we've lost a 250-day moving average as well. Yesterday we closed above the 250. That's another entry point, mechanical entry point for trading Amazon. So I'm going to go ahead, just get out of this. It was a profitable trade. I did buy it here at 1765, but this is one of the reasons I like to phase out everybody for this exact kind of situation where you enter, you have a nice trade, you take some off at higher levels, but if it reverses again, you're playing offense as it goes up. You're giving people shares that really want them, portion of your shares as it moves up. But today's bar, there's a lot of bearish things going on here. Like I said, bullish engulfing candle to the downside. We closed above the 10-day yesterday. Now we've lost. Looks like at the moment we're going to lose both of these, closing below the previous day's low. Who knows? This might just hang out for a while. It might just go higher, right? I don't know. But this is a discretionary trade, and these seem like red flags to me. Now, if we close back above, if we, at the end of the day have some kind of rally and we can close higher than yesterday's close, I'll go ahead and keep it. So no profit targets today. Got kind of close on one of them, but we didn't quite get there. So if this closes under 1777.10, I'm going to go ahead and just lock in profits on this trade and call it good based upon this bearish kind of reversal candle. All right, next up is DDM. Same with Amazon. This was a close under the 200, close back over the 200. DDM is the double leverage Dow. This is an index based upon on the Dow index. So this is going to be a completely mechanical trade for me, unlike Amazon, which is a discretionary trade. But the same signal, the same signal back tests well on both Amazon and DDM with the close under the 200. Close above the 200. So this one hit some profit targets along the way. Didn't quite, got close when we were up earlier today, but I did not hit that profit target. But this is completely mechanical, very easy trade. What's going to happen with this trade is it's either going to continue to go up, hit my profit targets, I'm going to phase out until I am out of shares, or it's going to come back down, close below the 200-day. So this is kind of on autopilot. Mechanical trades are very easy because it's just one, you know exactly where you're getting in, you know exactly where you're getting out, you know exactly what's happening. So it makes it easier than discretionary trades, but there's pluses and minuses to each. If I was in if this was a discretionary trade, would I get out? Probably not. Compared to Amazon looks a lot worse, right? We make a lower low. We've lost all these moving averages. DDM here, still holding the 50 RSI, still holding the 100 at least at the moment. But again, this is a mechanical trade, so I'm just going to keep in this till it either closes back below the 200 or it continues to move up, and I just phase out until I'm out of shares. So those are the two ways I will get out of this trade. All right, well, Etsy is my big stinker for today. I did enter back here on the 28th of August when we made this higher low V1. Here is day one, here is day two. Day two washes out day one, closed nicely above for a valid V1. MACD was positive. It rejected the -1 ATR channel, which I always like, and closed back above. So it looked good. Did hit one profit target yesterday on Etsy right at the top. Today it gapped up a little bit, but it's reversed very strong to the downside, and my stop on this, my end of day stop, was halfway of this bar. So here is day one, here is day two. Day two washes out, goes above, closed below halfway of this bar. It should have held some support here, but it did not. So I will go ahead and get out today if it closes under 53.52. And I should mention to you that that's based upon the end of day stop. The other type of stop I would have would be an emergency stop, which would be 5% below my entry. So if today we had gone down here, I would not have waited till the end of the day. I would have gone ahead and just gotten out, because if something is a one-way train down and it keeps going down, you just can't wait and wait and wait and wait till the end of the day. to make your decision. So you have to have some kind of emergency stop. So if it would have got down to here, I would have gone ahead and just locked in that loss there, but it hasn't got there. So I'm just waiting until the end of the day. But if it closes below 53.52, I'll go ahead and get out. I like this trade. I like this a lot. Unfortunately, it just didn't work, and that's just how it goes with trades, no matter how good they look. Luckily, you know, I always talk about trying to find the bright side in everything with your trading. This was under the 200-day, so this was a half a position. So I'm certainly thankful for that. But yeah, Etsy is struggling here today. So I will go ahead and get out of Etsy unless we close back above 53.52. So it'd have to go up about another $1. All right, our famous SPY position. So as you know, I do buy the SPY each day at the close. Every day I sell it first thing in the morning, and I don't factor in technicals. I don't factor in anything. I just buy it at the close, sell it in the morning. So you might think, well, that doesn't sound very precise or like there's a lot of strategy to it, but this is based upon a back test from Lizanne Saunders at Bespoke Invest on Twitter. Since 1993, you have two options with this approach. First approach, you can buy the SPY at the open each morning and sell it at the close every day. Buy at the open, sell at the close. Buy at the open, sell at the close. You do this every day since 1993. You would have actually lost negative 13.9% on your money. But if you do the opposite, which was what I do, I buy the SPY each day at the close. I sell it first thing in the morning, every day. Buy at the close, sell at the open. Buy at the close, sell at the open. If you would have used this approach, you would have actually gained 634.2% since 1993 to January of 2019. And Steve Burns did a more recent study about 5-6 weeks ago where he did it from 1993 until about 5-6 weeks ago, and it actually returned 712.63%. So, you know, what I really want you to take away from this chart is this approach has a clear edge. But as with any edge, there's ups and downs, right? This is a good approach. You know, I use this every day. But an edge will eventually play itself out given the right amount of time. But in the short term, anything can happen. So whether it's using this approach or any other trading approach, you have to realize that trading approaches are going to have ups and downs. And if you use too large of a position size at any point, you may start that right at the very top and just get clobbered, right? So I use a 10% position size, and I use the 10% position size on most of my other trades too, because I know that the approaches I have an edge, but I don't know in the short run what they're going to do. So I have to bet conservatively so that I can stay in the game to let my edge play out. So hope that makes sense. And we've done really well with this lately. So I did buy this yesterday at 292.58 and sold it right at the top. You know, this is a perfect example of people bidding it up in the after hours, bidding it up in the pre-market, and selling immediately into the open. So we got the high of the day, 294.20. So, you know, we've had some really good trades on this lately. You know, Wednesday we bought here, had a huge gap up yesterday. Today we bought here, had a really nice gap up. So this has been very, very profitable for me since I started using it back on February 26th. I mean, there's ups, there's downs. I think the whole month of May I lost money using this. But again, long term, let the edge play out. Anything can happen in the short term. So I will be buying this again today at the end of the day as usual. All right, XLF. As with DDM, this is a completely mechanical approach. I bought this back here on the 28th of August. I bought it because the previous day went under the 200-day moving average. On the day that I bought it, it closed back over. This is a good, valid, profitable, quantified backs testing approach as far as staying in the XLF, which is the ETF financial sector ETF. Staying in this, if it continues my way, staying in it, phasing out until I'm out of shares, or to the downside, if we close below the 200-day, just get out. But the key is giving yourself upside potential on this, being patient with it, being open-minded with it. But if it goes below the 200, just take a small loss, lock it in, and that's it. The key to profitable trading is having large wins, small wins, scratch trades, but only small losses. You have to keep those losses under control, and that's why I like to buy my positions as close as I can to my line in the sand, to where basically if I'm wrong small. So this has worked out nicely for us. Bought this here at 26.41. It's moved up nicely. You can see I did hit one profit target today at the very, very top, which I'm thankful for. Hit a couple profit targets yesterday. So no matter what happens, even if this comes back down, I've locked in about 26% of my shares in the profit area. So, if it comes back down, nobody can take that away from me. Right? Nobody can take away the profits that I locked in. And if it does just go down, then I'm losing less money because I've already sold a portion of my shares at higher prices. And that's why I'm a big fan of phasing out. So this is mechanical. I'm just going to stay in this. I'm going to stay in this with two possible outcomes. It continues to move up. I'll continue to phase until I'm out of shares, or it comes back down, closes back under the 200-day. So that is the plan. So again, real quick, Amazon, if we close under 1777.10 today, I'm going to get out of this because of this bearish, bullish engulfing and a close below the previous day's low and a close below the 250. So this is looking fairly likely that I'm just going to go ahead and lock in profits here. DDM is mechanical, nothing to do there unless it closes below the 200. Etsy, definitely looks like I'm going to be getting out of this here. As a matter of fact, I think I'm just going to put in putting in a market on close so that can just, I won't have to worry about that at the end of the day. SPY, we're going to be buying that at the end of the day again. And then XLF, just our mechanical approach. If it goes up, going to phase out. If it closes under the 200, I will go ahead and get out. But I don't think we're going to have much to do there. So let's see. Hey, Mount Doji, how you doing, buddy? Mount Doji says, hello, hope everyone has a great Labor Day weekend. Thank you. Hope you do too, Mount Doji. I will be golfing all weekend in Scottsdale, then doing my fantasy football drafts with my buddies. Sounds like a good weekend. That sounds like a good weekend. You still have your McDonald's and you still have your Nike, Mount Doji. Be interested to see what your plans are with that. So anyway, listen, as you know, I like to do a few minutes on trader psychology each day. It's very important, everybody. It's the biggest skill you're going to have to learn in trading. All these charts and lines and all this other stuff, yeah, they're important. I mean, there's certainly a place for them. You have to have some guidelines and a context to trade off of. But in the long run, whether or not you're going to be a successful trader, a successful long-term trader, or an unsuccessful short-term trader is going to depend on handling your emotions, dealing with fear, greed, frustration, despair, all the things that you can deal with in trading. So the real skill, and really listen to what I'm saying, the real skill is trading correctly, position sizing correctly, following your rules, not getting frustrated, doing things that you don't want to do, and not doing things that you want to do. That's really what the psychology of trading comes down to. And this is a post by Stephen Goldstein at AlphaMind 101. Stephen is a great trading coach, former trader. He has a great Twitter feed at AlphaMind 101. He also has some really good podcasts where he interviews some really great traders on trader psychology and other things. So you might want to check that out. He posts everything on AlphaMind 101, but I would suggest you subscribe to him. He posts really great stuff. I always look for this, but Here he says, trading is an art. Like all arts, it takes years to learn and far longer to master. Don't beat yourself up if you aren't succeeding in the early years. You wouldn't be expected to succeed in the early days in any other field that takes skill and guile. Manage your expectations. And of course, when you start out trading, everyone thinks that this is what it's about, right? They think that, they think it just goes up. It does not. I've been trading for 24 years. It's still like this. Up and down and up and down, and you get frustrated and you're like, do I really want to do this? But I mean, I can tell you from years of doing this, in the short term, it's chaotic. It goes all the way up and down. But if you trade correctly, if you trade with an edge, eventually that edge plays itself out. But again, I always talk about this. You have to position size correctly. Don't try to think, I got to make a lot of money this week. It is not going to work. The only way this is going to work for you is in the long run, following your plan, doing what you're supposed to do, knowing that the reality of trading is like this. When I first started trading, I thought it was like this too. And it's not. It's up and down, and you go for months and you don't make any money, and then you have losing months over and over, and it wears on you. It wears on you, and it sets you up for a position where you might just get frustrated and make a huge trade and be wrong, and then you blow up your account. If you take anything away from this podcast and from this live stream, guys, look at it 5 years down the road. Look at it 10 years down the road. Take your profits, follow your plan. When you go to a grocery store sometimes and you look at the final bill, you're like, what? I didn't buy that much. And you look at everything and it just looks like a little bit of money here, here, here. And it always adds up correctly, right? Well, that's what it's like with trading. A lot of these wins over time add up, and they're certainly going to add up. But again, you want to stay in the game, everybody. The only way you're going to stay in the game is by trading and not losing your money. And the only way to do that is to position size correctly so that you can stay in the game, you can acquire a skill, you can get experience, and you can let the edge play out for you. So thank you, Stephen Goldstein. Trading is an art. Like all art, it takes years to learn and far longer to master. Don't beat yourself up if you aren't succeeding in the early years. You wouldn't be expected to succeed in the early days in any other field that takes skill and guile. Manage your expectations. This is the reality, but reality still has an upward drift if you trade correctly. So thank you, Stephen. Appreciate that. Hey, Ramble Ron's here. Hey, buddy, how you doing? Good to see you. Don't forget to hit that like button. Oh, thank you very much, Ramble. I appreciate it. Yes, hit the like button. It really does help with getting with Google or YouTube, promoting the channel to more people. So thank you for that, Ron. It's good to see you. All right, so there we go. So let us go through the watch list and see if we have anything today. So Jay-Z said, first thing to do when I enter the chat room is hit the button. Oh, thanks, man. Thank you very much. I do appreciate that. All right. All right, well, let's go down and see if we have anything happening today. So here's Apple. So Apple's down $1.08. Like everything else today, it did gap up higher. We are back into the value zone. We poked our head above. We didn't like it. Nothing really today. I just don't see anything here for me to be interested in. I literally would have to. I would literally at this point, because now it looks like we're making a lower high, I would need this to come down in the deeper part of the value zone, consolidate, look for a V1, V2. Alternatively, a 30 RSI would be an interesting place here, but it's range bound here. Nothing, volume seems pretty weak. I just don't see anything here on Apple that I'm interested in. Adobe has just been really range bound up and down and up and down. No ability to make a trend here. I mean, this is, look at this, up, down, up, down, up, down. So, you know, my sense in this, you know, this range that we have, we're consolidating. I feel like we're going to have a move one way or the other. I just don't know which way it's going to be, and I don't know when it's going to happen. But with this kind of sidewards movement, eventually you are going to have some kind of movement one way or the other. That I know for sure. I just don't know when, and I just don't know what direction it's going to take. But there's nothing there. Silver has been a wild one lately, hasn't it? I mean, look at this. We got almost up to the 6 ATR channel. The majority of the time you get up this high, and that's generally pulling the rubber band pretty tight. But nothing on silver. Yesterday we had this big bearish engulfing bar to the downside on a huge amount of volume. I certainly wouldn't buy this here. It's too high to buy. I wouldn't short it here. For me to get interested in AGQ, I would need the 5 to cross under the 20 and then back over. Or come back into the value zone, move sideways, have some kind of consolidation. Way back here, back in July, this is a good example of when we had the 5 EMA close under the 20 EMA and then close back over. That's a good mechanical approach, just like the mechanical approach I was talking about with DDM and XLF. But this was a great trade. We scaled out all the way to there. I ran out of shares. But right now, today, there is nothing there. Advanced Micro Devices, it's just moving sidewards. We have a MACD crossover, but just sidewards movement here. There's really no reason to get involved for me in Advanced Micro Devices at this point. Amazon we have bounced off the low, so there's a chance that we could stay in this with a close over 1777.10 if it keeps rallying. So we'll see. We'll just wait till the end of the day. Otherwise, I'm going to go ahead and lock in profits. Boeing up today, so it's showing some good relative strength, having some issues here with this third ATR channel. 90% of stock prices stay above the negative third ATR channel and stay below the positive third ATR channel. They stay within this extended channel. So I don't usually buy things when they get up this high. Doesn't mean it can't move up, but majority of times this is where it's going to find some resistance. So I'm not going to do anything with Boeing today. Alibaba is moving up again today, so it's very, very strong. I considered buying it back here. Wish I would have. We had this nice move up. We came back down into the value zone. That is requirement number 1. Requirement number 2 is it moves sideways. And then requirement number 3, we needed a V1. Well, that was a great V1 right over the 200-day moving average, but I didn't take it. I took something else instead. If I were in this trade, I would keep it. It's made a higher high. It's not making a lower low. But I'm not in this trade, and I couldn't buy it at these levels. Caterpillar moving up nicely off of this V1 right here. Having some issues with this prior high over here. Can't really buy it here. The people that bought it down in this range, I can promise you they're going to be looking at this 50 RSI up here, and they're going to be looking to lock in their profits if it fails. That will probably cause it to come back down for a little bit, and then I would look for a V1 or V2 to the upside. DDM we have. This is mechanical, so doesn't look like we're going to have to do anything today. Walt Disney, Mac. Oh, sorry. Hold on. Puppy pulled the cord out. Okay. Walt Disney. Looks like we rejected the 1 ATR channel here. You know, in order for me to get interested in Walt Disney, I'm gonna have to have some type of crossover. I believe there's a good valid crossover on Disney, which is the 1050 EMA. We're not quite there yet. So if that crossover happens in the future, I might consider it taking there. If it goes up to the downside, I'll be looking for a 30 RSI. Etsy is my stinker today. Definitely going to be getting out of this today. Like I mentioned, it's under the 200 days, so I'm grateful that I only took a half position. So that helps, but nonetheless, definitely a stinker. And I like that setup. It just didn't cooperate. And you know, if you took this setup 100 times, everybody, you would probably be profitable somewhere between 60 and 70% of these trades. But there's also a lot of trades where it's going to work against you. So no matter how good the setup looks, you know, don't be stubborn and go, well, the setup was really good, I'm just going to give it a little bit more room. Don't do that. You know, this told me I'm wrong, I'm getting out. Ford Motor Company is holding above the 200, so that is positive. But I'm not going to buy it there. Facebook, V1 to the downside. Looks like it lost a 50 RSI. So nothing on Facebook. I mean, in order for me to get interested in Facebook, I'd have to have possibly a double bottom with the bullish divergence. If we came all the way back down here, the MACD bars would go down, but they wouldn't be this deep. So I'd be interested if we could come back down, test this previous low, or move under 30, back over 30. That would also be interesting to me. But that would be about it on Facebook. Five Below had a big day yesterday, reversed. You can see we went above the 30 ATR channel, back under the 30 ATR channel. So is it gonna hold the low of the gap up day? It's holding right now, but I certainly wouldn't buy up here. I mean, I don't like to buy above the 1 ATR channel, let alone the 3rd ATR channel. Gold, I'm waiting for gold to come back down to the value zone. We are getting close. We are getting close here. Well, I guess technically we're in the value zone, but I'd like to see this come deeper into the value zone, move sideways, look for a V1 or V2 entry to the upside, or a 5 crossing under the 20 and then back over. That would be another signal. So 5 going under the 20, back over, that would be a valid signal, or a move back down into the value zone, sidewards move, V1, V2 entry. Google gapped up, reversed. What I'm waiting for on Google is a 1030 SMA cross. So the 10 right now is 1182 basically. The moving average, the 30 is 1183.50. So this is going to have to move up for another day or two in order for me to take this signal. But this is a good quantified approach to trading Google. It's valid, it's profitable in the long term. So that will be my entry on Google, will be the 10 crossing over the 30. All right, hold on everybody 1 second. Okay. Goldman Sachs is up today, so that is positive. We have XLF, which is a financial, so I don't want any more correlation. IBB is down today. It's a 44.35 RSI. I would be looking for an entry, possible 2 entries on this. 5 crossing back over the 30 EMA, the 5 EMA crossing over the 30 EMA is a possible entry, or another possible entry here would be a deep dip buy to the 30 RSI. And so those are the 2 that I would be looking for on on IBB. Intel is up today, which is positive. We came from a lower low here. We're at a 51 RSI. Looks like we had problems with this prior high right here. It broke out to a new range, reversed back under. MACD's positive. We're under the 200-day here, but there's really no setup here. Everything's just so range bound. IWM under the 200-day, MACD is positive, which is good. You know, I would be interested in possibly buying IWM if we could get a 1050 cross. This is a good back-tested approach, but you can see we're a long ways away. Here's the 10, here's the 50. This would have to move up a lot before I could buy that. The other option would be buying a dip to the third ATR channel if it lined up with the 30 RSI. That would be a good risk to reward. Doesn't mean it would make money, right? Doesn't mean it's going to bounce there, but it would give you a good risk to reward because you would have buyers coming in there. J&J just moving sideways, doing nothing. Coca-Cola close to unchanged on the day, above the number one ATR channel, nothing there. Lockheed Martin just kind of range bound. It's a little too high for me to buy. MasterCard tested that high that we had about a week ago, rejected it. It's a 55.72 RSI. It's above the 1 ATR channel, a little too high for me to buy. So nothing there. We did buy MasterCard back here on the 5th. Intraday, we had two signals. One, we pegged or tested the 100-day moving average, bounced right off of it, and we also went under 30 and back over 30. So two signals there, and you can see that was a really nice trade we had, and I phased out all the way to there. Altria had that huge day, big downward day. We are working on a double bottom though. See, here's a low, we have a rally, now we make a lower low. Do you see how the MACD bars here are not as deep as they were here? So more momentum to the downside than here. And if you have a double bottom with a bullish divergence, basically what's that saying is that the second move down did not have the momentum of the first, which kind of indicates that, you know, you might be running out of sellers and that you might have a reverse back up. But nothing on Altria today. Merck is just range bound, really nothing there. In order for me to get interested in Merck, this is a lower high than here, so I would need the prices to come down, wash out this low, have some kind of V1, V2. So essentially some kind of V1, V2 around the 50-day moving average. But, you know, you can see there's not a lot of setups here, but, you know, it speaks to patience. If you don't have any setups, just don't take them. You can go through, talk about the charts, talk about areas to look for in the future, but you can't force it, right? You have to wait for your setups. Microsoft gapped higher, reverse back under, V1 to the downside, still holding the 50 RSI, has a positive MACD, still holding the major moving averages. You know, somebody could go ahead and buy here if they wanted to and say, okay, I think the 50 is going to hold and I think these bands of moving averages are going to hold. But again, you're just anticipating. It's an anticipatory trade. And I'm not saying people can't make money with anticipatory trades, but I would much rather see this move down into the value zone, or tomorrow, or in the value zone tomorrow or next week, stab below and then reverse back up with the V1 or V2. That's why V1 or V2s are so good, because they tell you in the very, very recent past that the market just tried to go down and reversed, right? And that's good information to have. Netflix, nothing on Netflix here. Nike. Hey Murat, good to see you, my friend. Got that email you sent me. That was good information. So let's hope that's true, right? Thanks for coming. I hope you're doing well, Murat. And let's see. So Nike. Nike's had a nice move off the 200. If I were in this trade, I would still probably keep this trade. We made a higher high. We haven't made a lower low. So this all looks pretty good still, but nothing there for me today. Philip Morris had that big down move. I got clobbered there with the puts that I sold. Moving sidewards since then. We're at a 29.57 RSI. It's possible today, if we do close back above the 30, it's possible that I will take a 1/2 position in Philip Morris because it's under, and if it closes above, then that would be a valid signal. So let me write this down just so I have these handy. So it's possible that I'll buy this today if it closes back above the 30 RSI. Philip Morris, bearish engulfing candle to the downside, V1, rejected this previous high. That doesn't look very good, so nothing there. Qs, not a big day or anything. I forgot to mention I did sell a put on the Qs down here to 169, so that's going really well. I sold it here. It's moved up nicely since I sold it. So as long as the price stays above 169 by September 20th, I'll be able to keep all the premium. Right now I have about 60% of the premium already, so I'm just going to hang on to this one. It's been good so far. Snap just moving sideways, not doing, really not doing much, even on the day, so that's positive. So nothing there. SPY. SPY, we had that nice gap up, sold at the open, thankful for that. It's now lower, so I will be buying SPY at the end of the day for the overnight SPY trade as normal. Square, pretty big move down today. MACD has stopped going down, so I mean this seems like it's kind of working on some kind of bottoming pattern here, but I would need some kind of trigger to get in this stock. An under 30 back over would be great. Even if we came down Monday, had a smaller bar, and then had a V1 or V2, that might be interesting, but nothing there today. SSO is basically the SPY but double leveraged. TLT, this is interesting here because we make this high, we come back down, we make a higher high a couple days ago. It was a false breakout to the downside. Huge RSI divergence. You see how high we are here. You see how high the RSI is here. See how a couple days ago we made a higher high, but the RSI was only this high. So that's a bearish divergence. So I didn't want to short this false breakout to the upside, but I may consider shorting this if we move back up, don't make a new high, and get a V1, V2. That's where the easier leg will come down, because you make that high, you come down, you have dip buyers, you make a higher high, false breakout to the upside, you come back down. Well, there's going to be some dip buyers that are probably going to come into play, but if we go back up but can't make a higher high, that's when you have the easier leg down. So nothing yet on TLT, but it's it's kind of starting to shape up from a technical standpoint. Tesla was up much higher today, just pegged the 30 or the 50-day moving average and reversed back down. So that's not a great sign, but certainly no trade there. Twitter, at least it's green today. It was down much more earlier in the day, so good to see that. But nothing there on Twitter. Natural gas has had a big move up because of the possible hurricane coming. Nothing there. United Healthcare had that. I considered buying this. Obviously, I should have. But we went under 30, back over 30, had a valid V1, went under the third HER channel, over the third HER channel, and it has rallied a couple days. But I do want to point out here, guys, that the people that bought down here, they have their finger on the sell button. Once this starts to, because if I had bought this down here, I would be waiting for some kind of reversal, lower low, something like that, to go ahead and lock in the profits. And if they do lock in the profits, that will likely move this back down, right? But then the sellers will take control of the market again. But if it's strong enough not to go back down and test, if it's strong enough to have a V1, V2 to the upside, that's when I will buy, because the people that bought here sold here and sold in a couple days down. Now all those sellers are out of the equation. So nothing on UNH today. USO failed at the 200. I talked about that a few days ago, but it failed here, it failed here, it failed here, and it repeated. It did not like the 200-day. It did not like prices above the 200-day. So nothing on oil. Dollar broke out. Look at that, everybody. It's amazing, right? Nobody wanted it here. Now everyone wants it here. It's always amazing to me. When no one wants it, everyone wants it. Everyone wants it, no one wants it. So too high to buy, too strong to short. So I've got to pass on that. VIX. Talked a little bit about VIX yesterday, holding the 50 RSI back in the value zone. That might be a place for a little bit of a bounce, and it looks like it has happened. Up 20 cents is not much for the VIX though, so nothing here on the VIX, but we're still in a highly volatile situation. Whenever the 10-day EMA is above the 30-day EMA, that means volatility is high. If we could get the 10-day to close below the 30-day, then that shows that volatility is diminishing. But as long as that 10-day is above the 30, there's still potential for a lot of volatility in the market, and that's what we've had. We've had a lot of volatility. Verizon did move nicely off of that close off of the 200, but it's too high. I can't buy it there. Walmart. A lot of tests of previous ranges and reversals today. You can see here was the previous high. We poked our head up, reversed back down, so that's a false breakout to the upside. Doesn't mean I'm going to short that there, but I'm certainly not going to buy that there either. XLE, about break even on the day. We finally did get above the 10-day moving average, and it looks like we're holding above the 10-day moving average. MACD is positive, but there's really nothing I can do with this. What I'd like to see a day or two down and then have a higher low V1. That would be my entry point. Financials, we have this. We bought this with the close over the 200. It's moved up nicely. Was lucky enough to hit one profit target today and take some chips off the table at the very top. All right, real estate, just kind of moving sidewards there. It's too high for me to get involved with. Utilities, the same. Healthcare did test the 50 RSI earlier and got rejected. That's not a good sign. And pharmaceuticals. So the only thing on my radar right now is a possible buy of a half position of Philip Morris if we close above the 30 RSI today. And that's the only thing that I see today. So let's watch that at the end. Let's take a look at Amazon. Currently, as I look at it, we're going to have to get rid of that. The diamonds are fine. Etsy, I already have an order in to sell this at the end of the day. And then the SPY, we're going to buy that at the end of the day in the XLF. All right, so we have 6 minutes. I have to move the puppy around. I apologize. I'll be back about 15 seconds. Okay, sorry for the interruptions. Actually, this will be the last interruption. My little puppy Cooey that I've been babysitting for the last 2 months, she is leaving on Sunday to Hawaii. I'm gonna miss this little girl. She always knows when I'm doing the podcast, and that's when she wants me. The rest of the day she doesn't care, but when I'm doing the podcast. But anyway, so she's being shipped off to Hawaii this Sunday. I'm going to miss that little girl. It's going to be so strange not to have her. Let's see. John says TMV short TLT. TMV equals short TLT. All right, I'm going to look at that one. It closes. Murat says they have their fingers on the sell button. I liked it. All right, we'll look at that in just a second. Wow. Quite a rally at the end of the day. Might even go green on the day. That would be fantastic. Wow, look at this. All right, so we're gonna have to look at Amazon here. We may not have to get out of that. DDM is fine. Etsy is we're definitely gonna let Etsy go, but luckily it's off of its low, so that's nice. SPY, we're going to buy that at the end of the day. XLF is fine. So Philip Morris is getting close to a 30 RSI. So let me get these things queued up here. You know what? This is the tough one, everybody. We did go, let me see, we went a little higher. Yeah, we did go higher. So let me see, the 250 is 1774.84. 1774. So I think I'm gonna, oh man, that's gonna be right on the button, isn't it? All right, so Etsy is going to be sold. All right, I'm going to forget about Philip Morris. I have too many to look at. And I'm going to have to make this last second decision on Amazon. Really close. It's going to be really close. So we have 1 minute. What I'm doing is I'm keying off of the 250 day. So the 250 day is 1774.84. So far, so good. So one of the toughest parts of trading is when you have 2 or 3 positions right on, right on the bubble, photo finish.
Order filled. Order cancelled.
All right, it closed above. It closed above, so I did keep Amazon. I did not buy Philip Morris. Where did Philip Morris close? 29.86. Okay, so those both worked out how they should have been. So the reason I switched from the low of the day was because when you make a lower high and a lower low, that's the signal. But I actually just realized we made a higher high, so I want to use the 250 as my stop. I mean, it was just $1 or so away, not a big deal, but Let me see, the close there was 1786.40. No, sorry, 1777. So it did close below the low, but because we made a higher high, I switched to the 250-day, which it did close above. So I did keep Amazon. We did keep the DDM. We did sell Etsy at 52.79. Right there at the close. So I did take a loss from here to here on this half position. SPY, I redid. Let's take a look here. So we rebought the SPY here. Girls, sorry, doggy drama. 292.45. So we rebought that. And XLF, we did hit one profit target there and ended up. So very slightly down day today. Had a great day yesterday. End of the week, end of the month for trading. I looked at my results. I was just slightly negative for the month of August, but I feel pretty good about that actually. I mean, it was a pretty brutal month, pretty volatile month. So, just like you can have big wins, small wins, scratch trades, small losses, your month should be like that too. Big months, small months, scratch trades are very small. So, and that's what happened. So, all right. So listen, if you guys have any questions, please let me know. Just type them into the chat. I'm happy to go over them and address any of them, and the comments that you already made. But real quick, just to put in a quick plug, I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. So, if you feel like you could benefit with some one-on-one time with me, my email's in the description of this video and my hourly rates are too, or you can reach out to me on Twitter. I think one of the best advantages of a one-on-one lesson with me is that, we talk. It usually starts with a free phone call. I want to know about you and your trading, the challenges you're having, and what your goals are. And then I will create a customized lesson plan for you based upon what you tell me. And then during the lessons, I teach you, but I have you teach it back to me. We go through a lot of charts. I have you break down the charts. I have you explain back to me how you view them, what the risks are, what the rewards are, if they're good setups. And that really makes a difference. It really makes a difference. So, if you're interested, please let me know. And then also, if you like this channel and you haven't subscribed, I appreciate it if you would subscribe and hit the thumbs up button and the like. It does help get the podcast out to more people. I've had a lot of emails from people telling me, they're losing a lot less money. They're making money, based upon the way I trade. So I want to share it with as many people as possible. That's why I started the channel. So if you can, do me a favor, share it on social media, tell your trading friends about it, but at the very least, hit the thumbs up button for me. I would appreciate it. And then before we get to questions, in case we have some newcomers, I did a podcast with, sorry, one second. One sec. Yeah. I'll just show you here. I did a podcast here with Christopher Uhl at 10 Minute Trading on Twitter. And I think it was a good podcast. We talked about my trading history, a little bit more about me, why I started the channel. But if you're interested in listening to that podcast, I did put a post in the chat here. There's a link to that podcast. So if you have time, you want to check it out, the link is right there. So, all right. So John said TMV equals short TLT. So let's take a look at that. So this is a 20-year treasury. So it must be the short. It must be the short of the treasuries. Looks exactly the opposite. So, if we were looking at this, it's the short of TLT, and it makes sense. I mean, look, we have a double bottom, we had a low, we had a rally, we made a lower low. The MACD bars are not as deep as this previous low. We've had a little bit of a rally here, so this is starting to look somewhat bullish, right? So if you look at TLT, since it's the opposite, and this is looking somewhat bearish. So I think it's a good sign for stocks. If bonds went down, I think the money would be flowing out of bonds back into stocks, but who knows? All right. All right. Does anyone have any other questions for me about anything we did today, or if you would like me to take a look at a stock, or you have any trading questions, or if you have a good joke, something, let me know. Otherwise, I'm going to get out, do some hiking today, hang out with my puppy for the next couple days before she goes. Man, I'm going to miss that little puppy. I've had her for 2 months, and I thought I was going to go crazy the first couple weeks I had her, because every second she wants something, even during the podcast. But I'm so used to her now. We're such good friends. So I'm going to be sad to see her go. But I think she has a good home in Hawaii, right by the beach. And so I think she's going to have a good life over there. All right. Well, listen, if no one has any other questions, I guess I will call it. And I hope that you have a really good weekend. Murat says, are you breeding them? No. No, an old girlfriend of mine moved to Hawaii, and she got this dog, but Hawaii has a requirement where you can't let dogs in unless they're quarantined or unless they have their shots on the mainland for a certain amount of time. So she always wanted a dog, and I wanted to do her a favor. And so I took the puppy and been raising her, and she's had her shots, and now the time's behind. And so now she's on her way. So no, I'm not breeding them. And then I'll just have my German Shepherd, Katie, which you always see in the bottom left-hand corner of my screen. That's my German Shepherd, Katie. So Katie's going to miss her too. They're such good friends. It's sad. I'm telling you. I'm sad. But anyway, so listen, I hope everyone has a good weekend, extended weekend. I hope you have fun. I hope you're safe. Do something nice for somebody this weekend. Give them a smile. Give them a wave or a hello. Open the door for them. Do something nice. It's good for them. It will be good for you. Might brighten their day. And then I hope to see everybody back on Tuesday. Remember, we will not be here Monday. So I hope to see everybody back on Tuesday. And if you get some time this weekend, you want to listen to that podcast, it's from 10minutestocktrader.com, or the link is here in the chat, or the link is also on my Twitter feed as well. So anyway, hey, Sean Christian, how you doing, Sean? Nice to see you. Thanks for popping in here at the last minute. If you have any questions, please let me know. Murat says Twitter CEO account is hacked. Wow. Well, if his account gets hacked, I guess we all have no hope. Right? So thank you, JT. I will have a nice weekend. I appreciate it. So thank you to JT. Thank you to Murat. Thanks, Sean Christian. Appreciate you coming by. I hope you come back. Ramble Ron, thank you as always for coming by. I hope you have a good week off. John, really good seeing you. Stay in touch. Mount Doji, congratulations on your McDonald's. Let me see what McDonald's did today for Mount Doji. Down a little bit, but everything seemed to be down. But hope you have a good weekend doing fantasy football and all that. And golfing. Hope you have a great time. And Steve Burns, thank you, my friend. Thanks again for putting me in the list. Thanks for coming by. It's always exciting for us to have you in this chat with us, and it's an honor, seriously. And I hope you have a good weekend. So I think I got everybody. So All right. Well, that's it. Have a good weekend, guys. And remember, we're not here on Monday. We're here on Tuesday. So take care, have fun, be safe, and hopefully see you guys on Tuesday. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.